For as long as humans have built cities, we've needed trust. Trust to store value. Trust to trade. Trust that a promise written or spoken would be honored. The story of banking isn't just about money. It's about power, faith, and the fragile balance between ambition and collapse. Today, we journey from the temples of Mesopotamia to the towers of Wall Street, to uncover how our world's financial heart evolved and what history warns us about its future. Our story begins over 4,000 years ago in ancient Mesopotamia, the land between the Tigris and Euphrates. Back then, temples weren't just places of worship. They were the first banks. Farmers and traders deposited grain and silver at the temple for safekeeping. Priests recorded every transaction on clay tablets, receipts, debts, and loans carved in cuneiform script. Interest rates existed. Contracts existed. Even compound interest existed. In Babylon, the Code of Hammurabi, written around 1750 BC, detailed banking laws, setting rules for loans, collateral, and repayment. Temples became financial fortresses, trusted not only by gods, but by kings. As empires rose, the sacred gave way to the secular. In ancient Greece, private moneylenders called trapezitai operated from tables, or trapeza, in bustling marketplaces. They exchanged foreign coins, kept deposits, and issued loans. In Athens, wealthy merchants funded voyages, wars, and even public buildings through loans and credit. The Romans took it further. They built a sophisticated banking network with bankers called argentari and mensari. These early bankers handled deposits, credit, and currency exchange across the empire. But Rome's collapse wasn't just political, it was financial. Debt crises, currency debasement, and state overspending eroded confidence. When the empire fell, banking fell with it. Europe entered a long financial darkness. For centuries, money and religion remained entwined. In medieval Europe, Christian law forbade usury lending money at interest. But the demand for credit never stopped. Into this vacuum stepped the Knights Templar warrior monks, who became the bankers of Christendom. Pilgrims traveling to the Holy Land could deposit gold at a Templar outpost in Paris and withdraw it in Jerusalem using a coded letter of credit. It was revolutionary, a medieval wire transfer. The Templars' vast network of castles and treasuries effectively formed the first international banking system. Kings borrowed from them. Armies depended on them. Until, eventually, power and money made them a threat. In 1307, King Philip IV of France, deeply in debt to the Templars, accused them of heresy. He dissolved their order and seized their wealth. Once again, a financial empire built on trust was undone by politics and greed. Then came rebirth, the Renaissance. As trade flourished across Europe, a new class of bankers emerged, the Medici family of Florence. They innovated with double-entry bookkeeping, credit letters, and branch networks spanning Europe. Giovanni di Bicci de' Medici's bank managed the finances of popes and princes alike. For the first time, banking was not only about safekeeping, it was about influence. The Medici and others transformed banking from mere money handling into the machinery of power. Florence, Venice, and Genoa became the world's financial capitals. Paper credit replaced gold, and with it, the ability to expand economies beyond physical treasure. As European empires expanded overseas, the flow of gold and silver exploded. Spain plundered the Americas. England and the Netherlands built vast trade networks. With this came volatility booms, crashes, and wars. To stabilize their economies, nations created central banks. The Bank of England, founded in 1694, became the model for the modern banking state. It issued paper money, managed government debt, and controlled the flow of credit. Banks had become the hidden engines behind empires, the quiet power that could make or break nations. By the 1800s, the Industrial Revolution transformed everything. Factories needed massive capital. Railways, steamships, and industries required loans bigger than any one man could offer. Private banks evolved into joint stock corporations. Stock markets were born. Investment banking emerged, financing innovation, but also speculation. The same patterns returned: booms, bubbles, and busts. The trust that had once been held in temples now rested in ledgers and balance sheets. In the 20th century, banking conquered the world. From the roaring 1920 seconds to the crash of 1929, from the creation of the Federal Reserve to the Great Depression, finance became the pulse of modern civilization. After World War II, Wall Street rose as the financial center of the new global order. The dollar replaced gold as the world's reserve currency, and the same ancient principle, trust, became digital. Computers replaced ledgers. Algorithms replaced clerks. The faith that once lay in gods and kings now rests in code and credit scores. Yet across time, one truth remains unchanged. Whenever trust in money or institutions fades, collapse follows. From Babylon's temples to Florence's counting houses to Wall Street's skyscrapers, banking has always reflected human ambition, greed, and ingenuity. The forms may change, but the core remains the same. A fragile promise, built on confidence, that tomorrow your wealth will still be there. History shows when that confidence breaks, so does civilization. From temples to Wall Street, the story of banking is the story of us. How we built systems to trade, to trust, and to dream. And how easily, if we forget the lessons of history, those dreams can turn to dust.